We've got Dr. Wu also joining us now. Dr. Wu, thanks so much for joining us. We've been tracking the kind of impact that the coronavirus scare has had on commodities globally. Want to understand from you the hit that they've taken and how much lower you see some of these prices moving, given what's happening on the demand side.
Right. The prices, like you said, are very much driven by the demand impact right now. So we talk about the worst case scenario, S&P Global Platts. We see that the worst case scenario could hit the market. The demand can be dropping by as much as 4 million barrels per day globally for the month of February. I know it's a very short period of time we're talking about. March will be better. In terms of the prices, dated Brent has been around $55 right now and going below. If we're heading towards the worst case scenario, it's very much likely that we are going towards the $50 or below. However, in the meantime, of course, it's a supply-demand balance issue, and we see that OPEC Plus is taking actions, so that will lend some support to the prices, preventing it from going too low for too long.
Sure. Dr. Wu, while the impact of the virus is still unknown and you don't know how long this is really likely to sustain, but suffice to say that we're looking at 1 quarter of an aberration when it comes to commodity prices across categories?
Right. That is about the good way to look at. However, we need another quarter as a follow-up. So the first quarter of this year that we are right now, it will be the worst hit for this coronavirus. And the second quarter will be a kind of a follow-up quarter. If somehow this virus can be contained successfully, then we may see positive results towards like end of the second quarter. All the indication shows that the difference of this one from SARS, for instance, is the outbreak is very, very fast and very increasing exponentially. With a slight good news that because of the harsh measures taken by China, may mean that they could prevent the cases from exploding into long-term effect. However, you're right. There's a lot of uncertainties since definitely the impact is here. Impact is already felt for this month of February and for this quarter and most likely next quarter.
Okay, so it's already going to see a longer lasting impact. That's the message coming in this morning. We've also seen a hit on crude, of course. We've been talking about Chinese oil demand plunging about 20%. What would you advise in terms of strategy then, Dr. Wu, in light of what you've just also seen, just also described as an outlook for the next couple of quarters? What would you suggest is the best strategy at this time?
Strategies for China or for the other country, every country?
Yeah. How you feel people will be viewing emerging markets currently.
I see. Yeah, indeed. For China itself, of course, they have to deal with the crisis itself, and the oil companies is a hard time for them. One thing they can guarantee supplies, so that will maintain some of the operations to make sure that at least they have enough supplies. Still, the real demand is coming down. We see that it's a similar number, of course, 20% or whatever, referring to a certain period of time, like February. If you're spreading it out to the quarter, it's a little better. Still, for a big economy, market like China, 15 million barrels per day oil market, 10-20% decline is a huge amount. Then the the independent refineries in China had really hard time, worse than the national oil companies, because they don't have much of the backup in terms of the guaranteed supply, guaranteed share. So China's shrinking demand and the refinery cuts means the demand for crude oil market, crude oil will be lower. So it's challenging for oil suppliers. For Asia and other countries, of course, is for those consuming countries, there is an opportunity to have the lower prices. But the problem is the economy. So if with the chain effect of this, the China, what happened in China means the growth of the industrial production, growth of trade will be negatively affected. But at least for a period of time, then we are, at least for the first quarter and part of the second quarter, we are in a period of low energy prices, including oil. But seasonally, the second quarter and the OPEC actions means it might be some support for the oil prices entering the middle of the second quarter.
Dr. Kang, we've had China infuse stimulus into the economy just the other day, and who knows that maybe this was just the first tranche and we will have more stimulus pushed back into the economy. And we all know from historical evidence, although I shouldn't say that, speak as soon, but we've had cases like SARS as well as MERS as well in the past, and the economies have revived eventually. Do you think then that these dips that you are seeing across commodity markets, both in crude as well as metals, could be looked at as buying opportunities if the dip were to sustain a little further down?
That's a very good question. Without directly advising any investment sort of decisions for any decisions, I would say that indeed after the epidemic is over, there will be sort of a revise of the demand. So the pent up demand and everything. So that could happen. But of course, we are in. If you talk about SARS, we're in a different time, mainly because of the state of economy is both for China and globally are not very fast growing. So we're in a slower growth mode. And China, of course, has a bigger share of everything, but the growth rate is also much lower. So there'll be opportunities as a seasonal, as historical historical sort of development to show that, of course, when everything's over, it will be a resumption of things. Right now, the stimulus program by China is pretty much right now is more like towards the virus itself. People reduce activities a lot. The government didn't particularly encourage people to travel more or do more to stimulate the economy. More like they try to ensure the production side, to at least make sure they have enough supplies for the infected areas and to at least survive this period of time before making any sort of having any impact on the economy as a whole.
Thank you for joining us this morning, Dr. Wu, and taking us through the likely implications of what we're currently seeing on global markets on the back of the coronavirus scare.